You know, what does financial freedom actually look like? For one single mother, it wasn't just about hitting some magic number. It was about finding a plan that actually let her sleep at night. Today, we're going to break down her journey from a really anxiety-inducing dream to a 150 million TWD plan that gave her true peace of mind.
And it really all boils down to this one single powerful statement. This is the emotional heart of the whole story, the big conflict that almost threw her entire strategy off track. It's that classic battle, right? Between what makes perfect sense on a spreadsheet and what actually lets you get a good night's rest.
All right, so let's get to know the person at the center of all this. She's a 41-year-old single mom in Kaohsiung, and she's raising 4 kids. And get this, she's already built up an impressive asset base of nearly 24 million TWD and can sock away a massive 500,000 TWD every single month. So the big question is, how does she turn all of that into a lifetime of real security?
Well, her first crack at an answer was ambitious, to say the least. I mean, she was aiming for a very comfortable retirement. But as we're about to see, it was built on a foundation that was just way too shaky for her to handle. Okay, so her initial dream was huge, retire in just 6.5 years and spend a whopping 600,000 TWD a month. But just look at the math. To fund that kind of lifestyle, she'd need 7.2 million TWD per year from a portfolio of about 100 million TWD. And right there, that's where the tension starts. A big, dangerous tension.
And that tension is all wrapped up in this one number, 7.2%. To pull 7.2 million TWD from a 100 million TWD portfolio means she's withdrawing 7.2% of her assets every single year. For retirees, that is playing with fire. It's an extremely high-risk strategy that could just drain her account way too quickly.
Now, to even try to support a withdrawal rate that high, the typical advice is to chase high-yield investments. But this created a massive roadblock. She had this really strong gut feeling against the popular Taiwanese high-dividend ETF, 0056. And because of some bad past experiences, she just could not stomach the thought of her money being invested overseas in the US.
So the whole plan was basically stuck. The math didn't work without strategies she just couldn't accept. And this is where the story takes a really fascinating turn. And it's all driven by one crucial choice she made.
She came back and asked this question. And this is the pivot point for the entire story. She actually volunteered to cut her dream retirement spending in half if it meant she could build a plan that felt safe to her, one that was based in Taiwan, and most importantly, one that let her sleep at night.
And that one simple question changed everything. It took the financial challenge from what her advisor called hell mode down to something completely achievable. But even more important, it created a plan that was psychologically sustainable for her.
So with this new, much more manageable spending target, how do we figure out the actual nest egg she needs? Well, the answer comes from a simple but really powerful guideline that's great for financial planning.
It's called the 40x rule, and it's a very conservative, very safe way to estimate your retirement target. The concept couldn't be simpler. Take your desired annual spending, multiply it by 40, and that's your goal. It's basically the inverse of a 2.5% withdrawal rate, which is widely considered very safe for a nice long retirement.
So let's apply this rule to her new situation and see how the numbers just click into place. Her new annual spending of 3.6 million TWD multiplied by 40 gives us a target of 144 million. We'll just round that up to 150 million TWD for a nice safety buffer, and there it is. She now has a concrete, mathematically sound, and psychologically comfortable goal to work towards.
Now, here's the crucial point. Yes, the asset goal is bigger than her original 100 million, but the path to get there is so much safer. Given her starting capital and how much she's investing each month, she can reach this 150 million TWD target in about 9 years. That's only a couple of years longer than her original, much riskier timeline.
Fantastic. So she's got her target number and a timeline. But what does she actually invest in? And maybe even more importantly, how does she get her monthly income without ever having to sell off her shares?
The final portfolio is a really balanced 3-fund solution that's based entirely in Taiwan. The core, 40% of it is in 00662, a NASDAQ 100 tracker for that long-term growth. Then for stability, 30% is in 00865B, a short-term bond ETF that basically acts like cash, reducing volatility. And finally, to give it a little extra kick, the last 30% is in 0067L, a 2x leveraged NASDAQ fund. It's a great mix of growth and safety, all tailored to her comfort level.
But this brings us to the 150 million TWD question, doesn't it? How does she get her cash flow from this portfolio without selling shares or chasing those risky high-dividend funds that she hates so much?
The solution is actually quite elegant, and it lies in this small number, 2.5%. Now, this is not a withdrawal rate. She isn't selling her assets. It's a pledge rate. It means she can use her large portfolio as collateral to take out a small loan for her yearly expenses, and at a very low interest rate. I mean, think about how powerful this is. By borrowing just 2.5% against her 150 million TWD portfolio, she gets 3.75 million in cash for the year. That easily covers her expenses, while the other 97.5% of her assets stay fully invested and keep compounding. It's a way to get income without ever selling your golden goose. No selling, no stress. It's brilliant.
This is an amazing solution for one person, but the principles behind it are totally universal. So let's pull back for a second and look at the key takeaways that can help any of us when we're planning for the future.
So what can we all learn from this? Well, first, her story shows we should always start with our desired spending. Your lifestyle dictates the target, not some random timeline. Second, your own psychology is a critical risk factor. She proved that if a strategy gives you anxiety, it's the wrong one for you, no matter what the spreadsheet says. And finally, building up enough capital is the ultimate key. A large enough nest egg unlocks all these conservative, low-stress options, like that pledge strategy, so you don't have to go chasing risky returns.
And we'll just end with her final words, which show this complete transformation. She went from being stressed out and confused to having absolute clarity and a concrete goal. She now has a plan that isn't just financially sound, but one that is emotionally sound too. And you know what? That might be the most important lesson of all.